Let's discuss some MCQs related to FDI. Foreign direct investment involves intangible goods, tangible goods, human resource, or intellectual property. So, FDI refers to investment in the business of foreign country. So, when we say investment into business, it means investment into physical assets such as land, machinery, stock, all these are tangible goods. So correct answer is option B. Next, foreign policy decision makers for spreading their information rely on public, media, politicians or bureaucrats. Correct answer is media. Next, international trade brings developing countries in contact with developed nations, modern ideas, developing countries, or sustainable growth. So, international trade brings developing countries in contact with all the different countries in the world. It can be developed country, least developed countries, or developing countries. But most probable answer is developed nations. The spot rate of exchange is quoted for the immediate delivery of foreign treasury, foreign exchange, foreign trade, or foreign transaction. Correct answer is foreign exchange. Foreign exchange is a market where all the foreign currencies are traded at spot rate, means the current market price, spot rate for immediate delivery. Correct answer is B. Which of the following statement is incorrect? In the foreign direct investment, foreign companies develop new countries in home country. Remember, home country means the country in which money is inflow. Next, foreign companies open their subsidiaries in the country in FDI. Correct. FDI does not create capital in the domestic country. This is wrong statement because it does create capital in domestic country. Country means home country. Next, FDI has favorable impact on production and employment in the state. That is also correct statement because when we invest into the business of another country, it means there is more production, more production generates more employment. So these are the advantages of the FDI. So D is also correct statement. Next question. Which of the following pair is not correct? Again, they are asked us to identify incorrect statement. Items in the negative list of import and export are prohibited goods. Correct. Negative list means prohibited list. FDI is not allowed, such as defense sector. Permitted issues. Permit issued by custom authority to export goods is doc warrant. This is the statement because FDI doesn't have anything to do with custom authority. Items which require license for export import are restricted goods. This is also correct answer because restricted list is a list of goods which are allowed only with the permission or approval from authority or RBI or any other institution. So this is also correct answer. So B is incorrect statement. Next, arrange the following steps of export procedure in chronological order. Order acceptance, order placement, goods removal from works, and goods readiness and documentation goods. So it should be first customer place order, second customer the dealer accepts the order, third they will prepare documentation, And fourth is goods removed from works. Works means factory. So this is this should be third point, and this will be last step. So 2, 1, 4, 3. Option B is correct chronological order. Customer will place order, then dealer accepts, then dealer prepare the documentation part, and then he sends goods from factory. Next, question number 8. Which statement is true related to the way of arrival of FDI in India? A point. Automatic route is called Delhi route. False. Automatic route, Delhi route, both are not. Delhi route is not even a term used in FDI. FIPB works under the Ministry of Industry. False. Next, in relationship to FDI coming through automatic route, no prior approval is required from the government or Reserve Bank. This is correct answer. Option C is correct answer. FIPB is authorized to approve the investment of up to 1200 crore. There is no limit. The limitation is in percent. FDI is allowed only up to 49% or either 74% or 100% FDI. But this is not a correct statement. So option C is our answer. Currently, in which areas is FDI in India prohibited? Prohibited means not allowed at all. So atomic energy, no FDI is allowed. Lottery business, no FDI allowed. Gambling and betting, no FDI allowed. Cheat fund, Nidhi company, home and real estate business, not allowed. Construction business, construction of cigar and business. So construction of cigar or tobacco related products are not allowed. And metro rail, it covers under railways. So is public sector and it is not allowed for FDI or private sector undertaking also. So all these are prohibited items. So correct option is option D. Next, in order to overcome the ambiguity of FDI and FII in India, four-member committee has been appointed under the chairmanship of Manmohan Singh, Chidambaram, Raghuram Rajan or Arvind Mayaram. Correct answer D. Arvind Mayaram. The Arvind Mayaram committee was established in the year 2010. And it has provided the clear definition of distinguish between FDI and FII. Next, which of the following cannot be included in the method of FDI? Tax holidays, investment, financial subsidies, horizontal FDI, none of the above. So this cancelled, no proper options are given. Next, investors of FDI are active investor, non-active investor, both or none. Correct answer is active investor because FDI refers to the investment in business of foreign country. When a person indulges into business activity, it is a day-to-day business activity. It means regular activity, so it is active investor. Correct answer is A. Next, which of the following statement is not correct? Many parent enterprise provide FDI because of the tax incentives that they got. Correct. Acquiring shares are disintegrated from FDI. This is wrong statement. Our answer is B. Acquiring shares are disintegrated from FDI. Next, which of the following can be the cost of home country? Cost of home country means risk from political change, access to new market, reduce cost of production, or none of the above. So these both of these are the advantages, and A point. It is a disadvantage. Risk from political change is disadvantage because new political party comes up with new rules and regulations. So when political party or dominating party changes, then they come up with new rules and regulations. So there will be difference in the FDI Act or FDI rules. Next, the difference between the value of goods and services exported and imported by the country is a measure of balance of payment, balance of trade, service account, or none of the above. So these questions belongs to balance of payment part. So the difference between the value of goods and services exported imported by a country is a measure of balance of, it is actually current account because it includes goods and services both. So our answer should be none of these. Next, which items are included in the negative list of imports? Canalized items, banned items, restricted items, or all of the above. So the negative list is also called as restricted items, or they are the banned items or canalized items that we cannot import or no FDI is allowed. So all of the above is correct answer. The balance of payment account is conventionally divided into current account and capital account, visible account and invisible account, long-term capital account and short-term capital account, or none of the above. Correct answer is A. Balance of payment is divided into balance of current account and capital account. And even there are some reserve, that balancing figure we get as a reserve. So option A is correct answer. Next, the devaluation of currency of a country is done when. Now, devaluation means reduction in the value of currency. So, it has adverse balance of payment. Adverse balance of payment means when there is a deficit in balance of payment. So, this is correct answer. It has favorable balance of payment. So, this is wrong answer. Select the correct answer. Devaluation is done when there is adverse balance of payment. Option, only one option is correct. So C is our correct answer. Next, which of the following are items of invisible transaction? Invisible transaction means services, international transportation of goods, including warehouse, travel for a reason of business, education, health, insurance premium, and payment of claims. So all these are the services: transportation, warehouse, traveling and tourism, education, health sector, insurance. All these are service industries. So all of these are invisible items. So invisible transaction, all of the above correct answer. Which of the following is a principle of valuation of balance of payment account? The transaction should be valued at market price. Both import and export should be valued at free on board basis. Both A and B, none of the above. Correct answer is both A and B. Which of the following statement is incorrect? Listing receipts and payment in international transaction for a country is called balance of trade. False. This is incorrect statement because balance of trade means difference between export and import of visible goods. So receipts and payment in international transaction for a country is called balance of payment. So A point is wrong. Option B, in the balance of payment, gift from foreigner is unrequited receipts. This is correct statement. So because when we say unrequisite receipt means unilateral receipt, one-sided receipt, it is a receipt side of balance of payment. So gift receipt from foreigner, gift is a unilateral transaction. Only there is inflow, there is no outflow. So B is correct statement. So our option is A. Next, which of the following is not correct? The absorption approach of balance of payment explains changes in national income and their impact on balance of payment. Monetary policy approach to balance of payment emphasizes the role played by money supply in the country's balance of payment. Traditional approach to balance of payment explains the volume of export and import of a country is determined by relative prices, and none of the above. All of these are correct statement. D is our answer. So none of these are incorrect. Next, which of the following statement is incorrect? In the balance of payment, indemnities paid by the foreigner is unrequisite receipts. Correct. Indemnity means donation or gifts. It is a unilateral transaction. Next, in the balance of payment, receipt from foreigner is capital inflow. False, it is a revenue inflow. So B is incorrect statement. Okay. Capital inflow, it is not capital inflow, it is revenue inflow. It is a current account transaction. Next, the following table shows the cost per unit of production of two goods, wheat and cloth, in two countries X and Y with no transportation cost and free trade. Which of the following will take place? No trade will take place. X will export wheat and import cloth. X will export cloth and import wheat. There is no enough information to the comment. So let's check. There are two countries X and Y and two commodities wheat and cloth. So this question is based on international trade theory. It means there are two commodities and two countries X and Y, two countries, and wheat and cloth, two commodities. So as per international trade theory, one country will produce and export that commodity in which it is efficient. It means lesser cost of production will produce and export. So we can see X is in absolute advantage of producing both the commodities. X के पास 50 रुपीज कॉस्ट पर यूनिट है प्रोडक्शन ऑफ व्हीट के लिए और प्रोडक्शन ऑफ क्लॉथ के लिए 100 रुपीज per unit. As compared to Y, the cost of production is less in country X. So country X need not import anything from Y. It can produce by itself and consume because X is in absolute advantage in producing both the commodities. So no trade will take place. Option A is correct answer. Next, the following two questions consist of two statements. You have to examine which statement are correct. Okay. Code A, both statements are correct. B, both are incorrect. C, one is correct, two is incorrect. And D, one is incorrect, two is correct. So let's check. Statement 1. A bill of lading is a document of title to the goods. True. Document of title means which represents ownership. So statement 1 is true. A bill of lading contains all the terms and conditions agreed upon between the ship owner. False. Statement 2 is false. So only statement 1 is true. Next, easy international trade helps in smooth working of international trade. True. The statement is almost similar. Easy international trade helps in smooth working of international trade. There is nothing wrong in it. Many parent enterprise provide FDI because tax incentive they get. True. Both of them are correct statement. Next, statement 1. In 1992, India opened up its economy and allowed FPI in its domestic stock market. True. Statement 2. It is a part of international trade. FDI is a part of FPI is a part of international trade. True. Both of them are correct statement. Next, the balance of payment is comprehensive record of all the economic transactions of the resident of the country. True. Balance of payment is different from balance of trade. True. Both of them are correct because balance of trade is part of balance of payment. Next, let's discuss some questions from previous year. Foreign investment can be made through which of the following routes? FDI, FPI, private equity investment, or foreign venture capital investors. So all of these are correct statement. FDI and FPI we have already covered. Private equity investment is when foreign company invest into the private equity of domestic business. It is private equity investment, and a foreign company invest into the newly established business. To set up new business, they invest into that venture capital. So it is also a part of foreign investment. So all of these are part of foreign investment. Correct answer is all of the above. List 1 and list 2 are given. Match the correct pair. Balance of trade. Value of export and import of country. Option 4 is correct. Being specific, value of tangible import or specifically goods. Balance of trade means export and import of goods. Current account. Current account consists of import and export of goods and services both, and unilateral transfer also. So one, balance of payment refers to all the economic transaction between resident of one country with residents of rest of the world. Capital account is transaction leading to change in the financial assets of the country. So option 2, 3, 2 is correct pair. Next, direct investment overseas aimed at manufacturing products not manufactured by the firm in the home country is a conglomerate FDI. So option 3. Then direct investment in a foreign country aimed to sell the output or product of a firm's domestic production. It is forward vertical FDI. 4. Then direct investment overseas aimed at providing input for the firm's production process in the home country is a backward vertical, and foreign firm investing overseas and taking control over foreign assets is inward FDI. 3, 4, 2, 1 is correct pair. Option C. Next, companies with low CRR, companies with low cash reserve normally prefer licensing mode rather than FDI. True, because they don't have capital to invest. That's why they prefer licensing, which is a annual fee. Then cash rich firms normally prefer FDI. True, both of statement are true. Option A is correct answer. They have money to invest, so they prefer to do FDI. Next, FIPB. Revamp the rules and regulation pertaining to accounting of foreign investment, investment by NRI, foreign investment, or all of the above. Correct answer is option C, foreign investment. Foreign investment, as the name suggests. Which of the which one is not the form of FDI? Purchases of existing assets in foreign currency. True, it is a form of FDI. New investment in property, plant, equipment, land. True. Making investment in mutual fund. So this is not a part of FDI. And transfer of many types of assets. It is a type of FDI. So correct answer is option C, which is not a form of FDI. C, investment into mutual fund is not a part of FDI. It is a part of FPI, foreign portfolio investment.